understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Welcome to another episode of The Tech Behind FinTech. I'm your host, Namdi Oswago. Joining me is Gary Dmitriev from CrestPoint Strategic Advisors. Gary, how are you today?
Hey, great. How are you, Namdi? Great to be back again.
Yeah, Gary is a returning guest. He's a friend of the show. We are going to get into it. Today's topic, the alt investment AI gold rush. So we're going to get into the alternative investment space and talk about how AI is changing. And you guys can give us some wonderful information on that. Before we hop into the show, and before we introduce our guest formally by reading his bio, let's just go over some housekeeping. We are streaming live from Facebook, LinkedIn, YouTube, and we have a separate stream going from Instagram. Those on Instagram, you can go to techbehindfintech.com to see the whole show instead of just my face. Okay. On that note, let's make it official and formally introduce our guest and get into the show. Gary Dmitriev is the founder and chief technology advisor at CrestPoint Strategic Advisors, LLC, serving the technology needs of alternative investment firms. Gary has spent 17 years in the financial services industry and has served as co-CTO and CTO at several top asset managers, leading back office automation initiative, bespoke platform development, and enterprise data analytics strategy. So again, Gary, welcome to the show.
Thanks. Good intro.
And like all our episodes, right, guys, feel free to drop a comment, questions. If you have some insights, put it in our chat. We'll make it part of the show and we'll ask Gary or we'll just talk about it. So we always love the interaction. That's the whole point of a live show. So on that note, man, let's get into it, right? So for people that don't know, Gary, what are alternative investments? Like, what's that space? What does that mean?
Yeah, so the alternative investment space are going to be things that are usually illiquid assets that are not easily priced in a public market, right? So things like artwork, real estate properties, private loan origination, right? Private credit, private equity, right? Pricing out a company's worth based on its cash flows, based on its business model and all that. These are all bespoke investments. They're very labor intensive. Typically, they take specialized knowledge. Things like if you're in the private credit space, originating a loan that is backed by some exotic collateral like intellectual property, patents, securitized by cash flows from litigation processes, buildings, right? Things like that. Those are going to be very highly specialized. It's not like you can go on Bloomberg, type it in, and then get the price and know exactly what it's worth. It takes a team to determine, right? Dig through lots of documentation, dig through financials, have their own proprietary models, and use their own proprietary methodologies that could be very competitive advantage like to that particular group or firm. And the way they value these things could differ from one to another. So it's called alternatives essentially for that reason, is that it's not your typical, buying bonds, buying secondaries in the public market that are priced the same way across the board, right? They're very niche, and because of that, they are ripe for technology disruption with tools like AI.
That's a good description. I mean, you mentioned something like being backed by litigation. So, just to, because average people are not really familiar with that concept. So, do you mean there is a pending lawsuit that could be awarded X amount of funds, and that could be used as collateral or
Exactly. So the cash flow from the settlement of that lawsuit would be used as a collateral to secure a loan to finance the lawsuit, for example. And that takes a team of lawyers, right, at the investment team to dig through the material, the case material, and be able to determine what is the probability of getting that money. What is the valuation essentially of that collateral? That's not going to be your average investment professional. They would need to work with legal staff members that are experienced in that space. And it's the same thing now. Be like, if you're securing, let's say, a private loan with real estate, you need real estate professionals, right? Or you're securing it with an energy plant, right? A nuclear power plant or something like that. You need experts in that field, and typically these firms will hire uh, ex employees of these firms that can then, contribute to the investment origination evaluation processes.
Oh, that's really fascinating. So, let's say hypothetically there's this class action lawsuit going on, and the potential of they could be awarded, I don't know, millions or whatever, hundreds of millions of dollars for this class action lawsuit. So that's right for this type of deal in which they can come to an asset management firm or some on the private markets to potentially fund the underlying costs that'll take to proceed with the lawsuit. Obviously, if it works out, right, then I guess, the windfall for that firm, they'll have to get fees. But if it doesn't work out, that's the risk. Is that accurate?
Absolutely, yeah, yeah, and there's risk with anything, right? There's risk with a real estate property being overvalued, right? And then the loan falls through, and then the collateral was worth a lot less than anticipated for whatever reason, right? Or and that's where a firm that's extending loans and backed by real estate, they need to be pretty sure that the collateral that they valued is valued appropriately, right? That goes with any kind of alternative collateral. I mean, there are things like, you could value someone's historical piece of artwork and say that's the collateral, and you're giving an individual, right, a private citizen, let's say a wealthy individual wants, a $50 million loan, and they're gonna build their house of their dreams, right? That's not a conventional type of situation. So they would go to an investment firm, say, "Hey, I have this Picasso artwork," right? And they would say, "All right, well, our art experts that we either have in house or hired estimate it's worth, this amount of millions of dollars. We're pretty sure it's worth this in the open market. We can now extend your loan with, it's going to be an interest rate that's going to be beneficial. And then if that loan goes into default, they would then take possession of that artwork or whatever other collateral they've evaluated. So they have to be pretty sure that it's worth what they think it's worth."
You right now, right? So in this type of space, let's say you're dealing with the artwork, would the owner of the artwork have to give it to the investment firm to hold it for safekeeping? Because what's to stop the guy from, you know, if everything doesn't work out or he defaults, to hide the artwork? Like, how does that process work?
Yeah, I'll be honest. That level of detail is probably beyond my wheelhouse. But they,
Okay.
this is all contractual, right? And that goes back to the point of alternative investments, private credit, private equity. These are document-heavy investment industries. So, when you write up a loan that's collateralized by something exotic, there is heavy documentation, right? There's a lot of legal legwork that goes into it. There's a lot of paperwork involved. There's a lot of due diligence process that's involved, right? And the example of artwork, again, I'm not an expert in that particular field, but having something like that valued, getting a third party to appraise it, things like that, right? Or if you're talking about real estate, typically the firm would have some in-house valuation team that is an expert in the industry. They would physically conduct a site visit. They would physically take pictures of the property. They would, look at documents, project plans, and say, "Oh, it's a hotel, and they're renovating these 50 rooms." And they're going to want to see detail. They want to see invoices, project plans from the vendors that are the construction firms that are doing that renovation. So it's back to my point about when you're originating a loan, it's not even close to the same thing as buying something that's publicly traded, right? There's going to be an underwriting process that involves collateral valuation. It could be physical, visits and meetings and photographs that are taken. Third parties could be pulled in to give their opinion on what these things are worth. Internal teams would have models that they manage that are proprietary that would evaluate the asset, either do like a cash flow model, right? Or your private equity kind of standard company valuation, or it'd be something a little more exotic, and they would look at multiple opinions and kind of put all that together into a deck. So that, and then the deal underwriting process itself, right? The origination process, pitching that deal right from the very beginning. You would have a deal team that would have to go to committee with a pitch deck that they've heavily researched, right? And they typically rely on analysts to pull all this information together. Some of which may not be available publicly, right? They might be coming from pitch decks from brokers, right? Or they might be coming from the companies themselves that they're speaking to, and they're saying, okay, what's your business model? Who are your customers? Let's see your financials for the last couple of years. So when they're evaluating some collateral and they're trying to see what would happen in case they default, it's a pretty heavy lift. And it's the same type of lift as if you're looking at buying a company, right? It's all a lot of heavy documentation.
Yeah, like with the real estate side, I get, because I've been doing that on the side outside of technology for like over 20 years. So that's like crystal to me. Fascinated by the other aspects. But as you're mentioning it, right, it all falls under this alternative investment space. So it's
Yeah.
definitely like, I'm just gonna buy some stocks or different types of assets on the public markets. It's as you mentioned, right, the word private. So these are not deals necessarily open to the public. So,
Exactly.
definitely fascinating, as you think about it. But with the technology side, usually things that, like, in this space that's rife with extreme documentation, extreme manual processes, and so forth, that's always, a technologist is a great dream for a technologist, because you get to now, how do we make things faster? How do we make things seamless? How do we automate it? And now the top of the food chain in terms of automation is artificial intelligence. So, when at what point during this whole process, because with the AI hype, and there's been different over the last decade, there's been different parts of automation, people and companies or vendors adding aspects of AI. But I think now we're really seeing, it was a saying a while ago that said, where technology can reach the point where it starts to look like magic, right? It becomes indistinguishable from magic. I think that was a quote a long time ago.
Yeah.
I
Yeah.
think we're at a time when we're seeing it. When did you realize in this space that, okay, this is going to be a competitive advantage if we get it right?
Yeah, I think it's well, first of all, AI, goes back years and years, right? It didn't start with the Gen AI boom.
Of
Um,
course.
AI was around for a long time. There were all sorts of algorithms in place to do things like predictive analytics. And my teams and I've experimented in the past with using Python libraries to do some predictive analytics on chances of loan prepayment risk, default, things like that, and consumer loan tapes, thousands of loans, and looking at what would be the chance of certain scenarios happening, right? Using OCR, right? There's a form of AI there, right? Of pulling out invoices and pulling out the amounts and the vendor information and other attributes, and then actually running some reconciliations. Things like that have been available for a long time, and that, I would say, is a little more traditional AI. Um, with the Gen AI boom, what I'm seeing is not so much a competitive advantage just yet, but what I'm actually seeing is the flip side. You can have a serious competitive disadvantage if you are not actively, if you're in the investment space and you're not actively experimenting with the technology, you're going to be at a competitive disadvantage a few years from now. The advantage certainly is, I mean, like I say, I don't see a competitive advantage yet. The advantage is being figured out right through these experiments. The advantage is going to be large volumes of documents being parsed out and synthesized and summarized. It can act as a co-pilot to deal teams, research analysts, looking for opportunities, um, digging through pitch decks, looking at even material that has been collected over the years that it's filed away in some share drive that companies are probably not looking at anymore. It's just too much to handle. So when I say disadvantage, the peers in the industry are, from companies I speak to, from large firms like Microsoft and Google, leaders in the AI space. Um, they all say the same thing, that these firms are all experimenting one way or another. So if you don't have an AI program and you're not actively looking at platforms and actively engaging with consultants and actively looking at, how can this add alpha or at least um, efficiency and scalability, right? Enhance back office processes. You're going to be at a huge disadvantage. You may not see it yet, but a few years from now, the volume of data that's available that has to be synthesized, right? Legal documents, research reports, sell side reports, information on the internet, right? You're looking at public trading ideas, and you have Twitter or X, right? You have tons of what's called alternative data out there. Published articles. If you're in healthcare investment space, there's research material, there's medical publications, there's FDA filings and opinions and things like that. That volume of data is not going to be something that a human can continue to perform. And that's where, going back to advantage, disadvantage, that's where a firm that really digs in and really finds where AI fits and what the right product is and what the right paradigm is for them, that's where they're going to see a huge advantage. Again, either in the origination ideation space for deals or on the back office, closing the deals, underwriting process, looking through past material that have either the deal teams have passed on or accepted, and kind of looking at some trends there, comparing a pitch, helping to write an investment committee memo. These are all things that you're going to have a team of analysts working on, and your peers will not, because they'll be using these kind of quote unquote co-pilot tools that are going to help them get the job done with a smaller footprint.
Let's unpack some things, right?
Yeah.
So the first thing I really like that you said, which is different, is we always talk about what's the competitive advantage? How can we move the needle forward? How can we get ahead of our contemporaries? All this stuff. You rarely hear someone talk about competitive disadvantage, right? We always talk in the positive. So
Yep.
as we're talking, I was thinking about the scenario which you're in a race and everyone has on two pairs of sneakers, and you have on a single sneaker and one barefoot. So in that, right, you're at a competitive disadvantage with all the other racers. Would
Yeah.
you say it's similar to what you're talking about? That it's similar.
100%. That's a great analogy. So it's kind of like saying, let's go back to 1995, let's say, right? Internet boom, right? World Wide Web. There were certainly companies that did not see how their business could evolve and how they could take advantage of the technology. And there are companies that built their whole business model around it. And then there are companies that started to kind of put their toe into the water and see where it goes. You fast forward 5 years from that point. If you have not even put your toe in the water yet on leveraging the internet to run your business, you're at a huge risk and a huge disadvantage at that point, because your peers have far surpassed you, right? And then not only your peers keeping up, but all the newcomers, right, that are launching left and right. So bring that to the current situation with the Gen AI boom, which a lot of technologists have actually equated to the internet revolution. Now, if you are not actively experimenting with the technology, right, actively running some kind of committee, right, some kind of, hey, let's see what we could do with this. Let's learn about it. Let's take some of our repetitive, mundane processes, especially, document heavy, text heavy processes. Let's start to poke around. Let's start to use them. Some of the vendors that we use, let's start to ask them, what are they doing with AI? Where are they going? The same thing with the vendors, right? If they're not actively incorporating AI today, they can't even have a sales pitch, because everybody in their space has something to show at this point. So it's the same thing. I think in a few years from now, it may not be super obvious just yet. I think everyone's trying to figure out where it's going to significantly generate some competitive advantage. But a few years from now, what you're going to see is LPs are increasingly going to start to differentiate firms that are leaning into this technology and those that are just completely ignoring it. LP requests are getting increasingly complicated, right? From what I hear from clients, they're getting the cadence is becoming more frequent. They're going to start to see that, hey, this firm, it's a fire drill situation to deliver, a holdings report, right? To an LP, it takes 4 days of people staying up all night to put this together, right? versus this peer of yours that maybe is a little newer, a little fresher, and really has leaned into some of this technology, not just AI, but just in general, digital transformation strategy, right? Coupled with AI, especially, they're going to be able to deliver these things much faster. They're going to be able to answer questions faster. Some of them eventually are going to start to have agents that an LP could speak to, right? Just like you're seeing retail clients engage with more and more these days. Banking, American Express, you're talking to an AI agent half the time. You're going to start to see investor portals that you can chat with, and you could say, "Hey, what's my exposure to XYZ? What's been my performance for the last couple of years in this fund? What's coming up? What would summarize my capital contributions? Where do I stand?" You're going to see these things evolving more and more, and the LPs are going to start to demand it, and they're going to start to differentiate um, investment managers against that type of metric.
So for people that are not in the space, when you say LPs, limited partners, can you just explain what that is?
Yeah, a limited partner is basically just an investor that signs a subscription document, an agreement with an investment firm, and they're issued K1s. It's essentially a partnership, but they have no say in the investment approach, right? That would be the general partner.
So,
It's an
and I
investor.
like, another word that you're using that I like is experiment, because that entails that we're not going to get it right the first time. We're really like testing, and we're trying to see, how exactly are we going to leverage this technology for our purposes. And I think, a lot of apprehension sometimes with newer tech and people integrating it is they want to get it right the first time, and consistently through your explanation, it was like experimenting does not entail getting it right the first time. It
Right.
actually means you're absolutely not going to get it right. And you're going to learn more from your failures than your wins.
100%. And that's I like to level set, right? When I speak to clients about AI, level set that it's not as mature of a technology, right, as some others, right, that serve the financial services space. So it's not that you can just implement it, turn it on, integrate it into your workflows, boom, solves all your problems, and now it's an active co-pilot with your firm. It's not like that just yet. There are a lot of firms launching products that are focused in the financial services space, the legal space. There are some new models coming out, large language models and Gen AI that are pre-trained in financial service material, and they can speak the lingo, and they're getting better at financial analysis, which they haven't been particularly great at so far. But a lot of it is going to be about experimenting, and that's where when we talk about how does a firm get started and how do they get on the road to success there with Gen AI, it's really going to be about having an open mind, um, understanding that this is a 80-20 situation. It's good. The technology will take you a good part of the way there and get rid of a lot of the kind of you know, parsing through text and summarizing, comparing, contrasting, and some analytics. But the ultimate kind of final 20% is going to be on the users, and they have to understand that it's not a magic solution. They also have to understand that it's not quite at the place where you hit a button and it just magically solves your problems. You do need a little bit of oversight. You do need some governance. You need rules of the road. Um, and then also just in the sense of implementing these things and experimenting, there has to be a committee in place and a top-down mandate to say, there's an expectation from every business team to come up with ideas, right? Most of which are, to be honest, they're not going to be AI, but that's fine. It's good to hear them out and to see where they can add value. And then start to experiment with a dedicated team and have champions, right? Key stakeholders assigned from each vertical to take it forward and partner with the tech team. This isn't a technology that's mature enough where you throw it over the fence to the tech team and they come back with a product that works. It's really, about a team that's well versed in AI tools to build a framework and a foundation and get you started. But then it's a very close partnership with the champions across the business lines to take it to the finish line. So that's yeah. I hope that answered your question. But that's where I see firms leaning into this approach, and that's where you're going to see success. And the mindset is very important. It's a little different from having a tech team in house that will build applications for you, release them to production, and then you're using them as described, right? It's not like that just yet.
And the thing that you mentioned with committee, I mean, we've seen that with all over the you know, let's just say 20 years, right? You see that concept of major transformations require a committee. Whether it was the time firms were migrating to the cloud, right? You need a cross-functional committee. Whether you're just talking about basic disaster recovery and business continuity, cross-functional committee. Whether you're talking about security, when you look at the concept of security is everyone's responsibility, not just the security team, cross-functional committee. So over the years, just in terms of making any type of transformation, we've seen the value of that, right? Because it usually leads to success
Yeah.
because you're getting various points of views and you're breaking up out of silos because it's impacting everyone. So that's definitely a model in within technology that we've seen has worked. Even bringing in not like the technology teams into like mixing and talking with the non-technologist business, but getting their perspective to build some sort of transformation or build some sort of solution. So I think that's been a proven model that worked well.
Yeah, yeah, absolutely. That's really critical. And then also the mandates, right? That's I don't want to downplay that. Setting an expectation from the top, right, from executive leadership that this is a technology that we have to take seriously, right? It may not work the first time. It may not solve all of your problems. It will require some additional effort upfront. But it's important to have those individuals that will step up and serve that champion stakeholder role and represent their groups, uh, because again, it's got to be a partnership. They're the subject matter experts, and ultimately it's the tools are helping them uh, evolve their roles in the organization and leverage the technology to really kind of change what it is their day-to-day job is. So only they can do that, right? There's only so much that the tech organization um, can push there. So again, like any other technology, any other transformation, very important to set an expectation. Very important to choose champions. Very important for everyone to know that this is something that they need to spend significant time on, right? And that's the only way you'll see success here. It's not something you could throw over the fence.
Think the difference with other transformations and this AI revolution, we could call it, is the experimenting part. With other transformations, we kind of have an end goal, right? We're saying, listen, we want to get off our things that are on-prem, we want to get them off-prem into a cloud environment with one of the big threes, let's say Azure, Amazon or Google, right? So that's a direct goal, right? With looking at business continuity, look, in case everything explodes, we need to figure out how the business is going to continue. We need a disaster recovery solution. Let's spend, all weekend. Different business teams now, once everything is launched, they're going to test out their application. So it's a direct end point. This is what we're trying to accomplish. We're building a cross-functional team, and we're gonna have this. Where in this scenario, it's let's kind of figure it out. Like we don't know exactly where that end goal is. We're trying to figure out what solutions, what it can automate,
Yeah.
where it can be beneficial. Like what are your thoughts on that?
Yeah, no, I agree with you. It's it goes back to just being open minded, right? In these committees, right? What the typical approach would be, you have these idea sessions, right? So let's say you identify, operations team, accounting team, investment accounting team, deal origination teams, maybe segmented out by strategy or by industry focus. Um, you know, treasury and whatever else, right? All the typical teams that you have in an investment firm. Um, so you segment those out. You launch these idea sessions, right? Have representation from these groups participate in the room, and you let them come prepared with 20, 30 ideas. Just throw things out there. Just say, hey, I typically review these two documents on a weekly basis. I have to compare them. I have to look at what was modified. You might have paralegals looking at drafts and saying, hey, how's this different from the previous one? Or, we have a credit amendment. How did it amend the original agreement? Just like these are kind of mundane things that, let's say, don't require an investment professional to kind of review and chime in. So you collect these ideas. Some of them, like I said, are going to be, I would say the majority are going to be sort of left of field, right? It's going to be, well, this might be a feature in an application that you already own that you might want to talk about. This might be an automation that we need to discuss. This might be a vendor product that maybe we want to look at. But some of them are going to be, hey, like, yeah, this is very doable. You're doing research on a company and, or you're looking at like legal cases or you're researching SEC filings. You're researching lawsuits, right? You might want to tap into data sources behind a paywall that you can integrate with. Like, I'm seeing more and more, Preqin, PitchBook type integrations, right? So, you collect these ideas, you take them away, you start to model them out, and come back to the teams and say, hey, these three are candidates. They're right for AI, possibly. And then we partner together to work on some of these ideas, and see what actually is going to add some value, see what's going to be reasonable, iterate together. You might have to go in and do some prompt engineering together as a team with the business team, and get to a point where something is fairly workable. So it's it just goes back to its experimentation, right? Like I said, it's really every case is going to be a little bit different. The good thing is typically for the average firm, and I'm not talking about the Apollos and the Black Rocks and investment banks, right? The average investment firm, right? Sort of emerging manager, maybe a couple funds under management, um, there are products off the shelf in the market that you can pay a license fee for, do a lightweight implementation, and then iterate using those platforms. You're typically not going to need pre-trained models. You're not going to need to hire, data scientists, PhDs. You're not going to have to build like a hardcore AI team that's building their own, models and fine-tuning models. The typical use case is going to be an off-the-shelf product. The barrier for entry is pretty low these days, and go from there. And there are more and more products that are launching that are already pre-trained and specialized. There are products that I'm seeing for drafting contracts. There are products for looking at law cases, right? Harvey, right? Like researching a law case material, and it's pre-trained on millions of legal documents. There are firms that are pre-trained on private credit agreements, loan origination processes. Then you have like the Bloomberg, I think they call it, I forget what they call it, but there's a Bloomberg like GPT type AI that they built, pre-trained on millions of data points from the public markets. And access to all of Bloomberg's data, right? You have Salesforce, Einstein GPT, pre-trained and fine-tuned on their data, right? And you could use that for CRM activity, marketing campaigns, drafting emails, that kind of thing. So, so the barrier to entry is pretty low for the most part, and I think it's not going to be as much of a technical challenge as an operational and sort of mindset challenge.
So I want to touch on that because you want to unpack some things you said there. So the first thing is terms of ideas, because it sounds like really different processes. Like, what's your process for this? Like things that what do you take it for granted? And then it sounds like they're listing all these things or talking to the committee about it, and then the tech team or the people that are like really shepherding the AI initiative is looking at, say, you know what? I think there's a solution for that to make this easier so it's not as manual. That's what it sounds like. Is that accurate? Or
so I would say it's in a committee head running these idea sessions with designated teams on the business side, and prompting them to bring use cases, after doing some kind of series of demos so they understand exactly what Gen AI can do. And for the most part, people are at least aware of the technology. Looking at use cases where they feel something like this can add value, right? And that's why you're going to get a lot of them that are going to be kind of left or right of center. But having them bring these ideas to the table. They could say, "Hey, I put together investment memos. I looked through decks, pitch deck, or it's a private equity firm. Is a great use case. They're collecting, you know, uh, pitch decks on companies that they might want to acquire. They're looking at their financials. They're looking at contracts they might have in place. They're looking at PowerPoint presentations of their business models, of their customer segmentation, of their market share, of their growth strategy, of their leadership, whatever, right? Everything. Um, Someone has to read through these things and they might say, hey, can AI read through these 500-page documents and multiple documents and come up with a thesis that says, hey, here's why, here are the strengths of this company. Here are the possible risks. Here is what the revenue was trending over the last 5 years and where we think it's going to go based on XYZ inputs, right? So you can do things like that. And that would give an investment team, a deal team, a leg up, right? That's something that an analyst would do, right? They would typically throw that kind of work toward junior analysts, and sit there and crunch through hours of looking through this material. That's something that it can kind of prepare. It's not going to give you a memo and say, hey, boom, like execute it. It's good to go. We think it's a great idea. But it's going to give you a package that somebody can then look at. And instead of reading 500 pages of material, you might have 30 pages of material that really hit the type of things that you typically look at and that you typically care about. So that's
So,
an idea of something where somebody would bring a very vague request and you might iterate on it together and come up with something that could add some value and could sort of nail on that.
a lot of the talk around when people talk about AI, they always talk about one of the fears that come up is, oh, AI is going to take my job, it's going to replace things. What in this market, in this vertical, what do you see? What functions do you see being replaced versus augmented?
So, yeah, that's a big topic, obviously, in the industry and a fear that some people have. I personally think it's not as much of a replacement disruption. I think it's in the sense a co-pilot and an augmentation. Um, I think what you're going to see is the upskilling of the labor force, especially the more junior labor force, where in the past, a lot of junior paralegals, junior financial analysts, um, a lot of work involved late long hours, late nights, reading through tons of material, putting together presentations, summarizations, notes, reading through sell side reports on companies, even researching on the internet. I think you're going to see less and less of that work being done by humans. But what you're going to see is these same individuals are now going to use these quote unquote co-pilots, Gen AI driven tool sets that will give them a much smaller data set to work with. And it's going to have them perform some kind of higher value work in the sense that they can actually perform some evaluations, right? And filter out some of the noise, right? So essentially, Gen AI will take a first pass, and you'll see these analysts taking that second pass before it goes to an investment professional. So I see it as augmenting. Hard to say. Are there certain functions that are just not going to exist a few years from now, from a human-driven perspective? Very possibly. I know there have been essays written on thoughts on how it could disrupt the legal space, how it could disrupt the accounting space. I think that it's going to become a tool. I think that these same conversations were happening when tools like Microsoft Excel were getting very smart and are launching. I think when the internet revolution, right, the computer revolution, right. I think these same conversations were happening, and in hindsight, yeah, some jobs were eliminated for sure. But then also some were upskilled and transformed. And I think that it's going to be important for universities and for the labor force to keep up with that change.
I mean, the biggest thing that we see when we start talking about artificial intelligence, machine learning models, is all about the data it sits on, right? So, one of the things they're calling digital gold now in other episodes that we've done in my own private research is that proprietary data over the years that a firm has at its disposal, using that underlying layer and putting, a certain customized model on top of that, right? That's what they're considering like the goal right now. And now, if your data underlying is BS, then
Hmm.
yeah, it's going to be beneficial. But if that, so that's like, from what I'm seeing and reading, that seems to be the real big investments. Like, we've been collecting all this data over the year. We didn't really know, we didn't have the technology to fully maximize it, but now we're getting these things. You mentioned now, for bigger firms, a lot of like investment banks are experimenting, have a lot of resources at their disposal to do so. For the smaller firms, you mentioned some vendors. What's the solutions that you've talked about in which the vendors can take advantage of that underlying data? How does that work?
Yeah, so just touching on what you just mentioned about these larger firms. So there was an article in the news about a year ago, maybe. JP Morgan launched a massive internal AI initiative, and they hired a large team of experts to do this. And they're building, I forgot what they called it, but they're building this internal agent, enterprise wide, that is going to take advantage of all of their research material, right? All of their deals, all of their origination, underwriting material. I mean, if you look at what JP Morgan might have in house, right? This is data that's probably never been looked at, right? So their idea is that they are pre-training proprietary models, pointing them at this data, and creating this kind of enterprise wizard that can make sense and predict and trend and do all sorts of kind of interesting insights, right? Um, so I think that that's super powerful. Not every company obviously is going to be able to do something like that, but you are seeing vendors in the space that can point to, for example, a knowledge base, right? You're answering, let's say, in very common use cases, the investor due diligence requests, and some firms are already launching. Some AI firms are launching modules specifically for that to manage that effort, right? DDQs. So you get questions from investors or prospective investors, and these are questions that have probably been answered before. And you want to look through your previous material and mine it and say, oh, we have these 10 approved answers that were found, and these 5 we've never answered before. They're brand new. All right, you just cut the time by 60%, right? You can pull up material that was previously blessed, and now you just have to answer the ones that were not previously answered. That knowledge based concept can be extended to really anything. And you can see how like retail firms like American Express, they must have a massive knowledge base of previously answered, approved, vetted responses to certain customer problems that now they can just dig into and synthesize and answer according to your particular need, based on what was previously answered. So there are tools now in the market that can look to knowledge bases, which could be in the form of uh, database data or in the form of data rooms, virtual data rooms. That's kind of the more common right now. Is these virtual data rooms putting massive amounts of PDFs, Word documents, Excel documents, and then using that as your source of answers, for example. Um, but then also what you're seeing now in the space is this concept of model context protocol and MCP, kind of relatively new thing, where it's allowing LLMs, large language models, to connect to enterprise data. So what you're going to see increasingly is the ability for these vendors in the space that can tie your, let's say, um, transactional enterprise data in the form of a data warehouse or data marts or even some of your homegrown systems, be able to answer questions based on that transactional data, which is going to be amazing, right? I haven't seen this work super successfully yet. There are a couple companies that specialize in this, but I think you're going to increasingly see that coming over the next year or two, where you can ask a question about your highest performing positions or assets over X time period, um, your counterparty risk exposure, your default rates on certain private originated loans, and all sorts of information, all sorts of financial metrics, through all of your history that now most firms have in the form of a database somewhere. So putting Gen AI on top of data like that it's going to be a huge unlock in the future, and using tools like this MCP technology is going to let players in the AI space tap into your enterprise data, not just documents, which they do today, but actually tap into your transactional data. And you see systems like Snowflake already dabbling with this. They have this Cortex feature. You can ask questions. It translates it to a SQL query, answers it for you. What you're going to see in the future is, hey, build me a chart. An investor's asking for returns in real estate, commercial real estate in this particular region. How have we been doing there over the last couple of years? What were some of the deals we closed? Who worked on it? That could be marketing material that's just pulled up from a query like that. So that's going to be interesting.
I haven't heard that term, and I'm fascinated. As you were talking, I just went, power of doing these live remote shows. You could just go on the internet. But it's really interesting. The Model Context Protocol, MCP, is an open standard developed by Anthropic to facilitate secure and standardized connections between AI systems, particularly large language models and external tools and data sources. It acts as a common interface, allowing LLMs to access and utilize resources and tools, enhancing the capabilities and enabling more complex interaction. Fascinating.
Yeah.
Thanks for that. Thanks. That's powerful.
It's absolutely powerful, and that's going to be a big unlock. And you're seeing firms now more and more start to integrate. Like I was saying before, start to integrate with data platforms like Pitchbook, right? For example, imagine you're marketing to private equity firms and of a certain size in a certain region. You want to pull up their management. You want to look at some deal history. You want to put together a proposal for them that might resonate based on certain parameters. That's something that you're going to be able to do increasingly, right? Or you want to tap into your CRM data and do some correlations or reports that you want to build against your CRM data, combined with maybe your investment history for those investors. Like, these are things that you're going to be able to do.
So, step one, right? Small fund manager, small team internally. I've talked to people in the past that it's just one guy in the office managing, a pension fund or something like that. Small shop. Not as familiar with AI. What's step one?
Step one, small shop, like you're describing. There are very low barrier to entry AI co-pilots out there. You are probably familiar, right? ChatGPT Enterprise, right? The kind of safer one that gives you that cordoned off area. Gives you a lot of features that you can use. You can build projects. You can upload documents. You can start to interrogate those documents. You can do deep research. A lot of cool stuff. Certainly, Microsoft Copilot, right? I'm sure some of your audience has seen this, right? I use it heavily in my business. Microsoft Copilot, it's like $25 a month, right? Added on to your Microsoft Office 365 license. Gives you essentially a ChatGPT model behind the scenes incorporated into Office products. You can transcribe calls, right? If the other party allows you to do that. Some are sensitive about that. You can save that. You can save that transcript. You can interrogate that transcript later and say, "Oh, what did Namdi ask about MCP? What were the next steps we agreed to after the call? What were some of the issues that were discussed in the call?" That's a huge time saver, right? Start looking at tools like ChatGPT. Again, they're generic. They're very easy to use, low barrier to entry, low cost. Start doing some research on investment targets, right? There are marketplaces now that are rolling out tools that can be incorporated into ChatGPT that can do certain things for you. I was just experimenting the other day with Zillow, right? The real estate company. Zillow has a module that you could bring into ChatGPT. I can start to interrogate real estate data. I can say, "Hey, find me properties for sale in this zip code. I think I will charge this rate. Here's how you calculate the cap rate. Here's some other metrics I want to look at. I'm going to estimate a down payment of X. What does it cost? Calculate X, Y, Z." You can literally build out a whole real estate model asking those questions, and it would give you like the top 3 choices in the zip code that you want with your metrics calculated. These are kind of interesting things that you could do with just ChatGPT. And then Copilot is a little different. It's a little more tailored to Office. It's a little more limited, but certainly great too. I could draft up an email to you, Namdi, and I could say, "Hey, write up an agenda for a show idea that I have on these 5 topics. Do some research. Throw in some interesting points that we want to touch on. Boom, I could have an email ready to go. Summarizing emails, looking at a chain of emails, you could have 150 emails with a client. I could go to Outlook and say, what haven't I answered? What questions have they asked? What were the next steps that they're looking for? What were some of the pain points that they might have mentioned? It'll save you tons of reading. It'll give you bullet points. So these are low barrier things, low barrier to entry AI tools that you can immediately take advantage of.
Oh, that's cool. That's good insight, especially for the smaller firms that may not have a technologist on staff. The next question: what's the number one mistake that these firms? What's the number one mistake that happens to these firms when they're going to AI? Like, what's the number one mistake that they make?
Yeah, I think it's probably what I touched on before, is that the assumption that this is like any other traditional technology tool where we're going to pay a license fee, we're going to buy this thing, we're going to give it to our tech team to set up and build out, and then we're going to use it, and it's going to add tremendous value to our organization. It's still very much, we go back to the word experiment. It's still very much in a experimental stage at most shops, and there has to be a focused effort to find the ROI opportunities, the alpha generators, the beta solvers, right? There has to be a concerted effort and a partnership between the business teams and the technology team. And there has to be an expectation set from the top down and enthusiasm from the stakeholders. To add to that is, another thing we mentioned, right, is that the 80-20 kind of rule, is that AI will not give you the final result most of the time. It'll bring answers to you and set you up for success. It's not going to be a push button solution to all of your use cases. In some cases, it's very good. I mean, conducting deep research, you could write up a little automation with a bunch of steps that'll conduct some deep research, opine on it, maybe add some more data to it, maybe look at certain material in house and try to like format it the way you want to format. You can do stuff like that, and that could be like a push button type of thing. But if you're talking about more complicated, deal origination processes, investor data queues, reconciling documents, summarizing financials, these are things that are going to need oversight and patience and someone to actually be accountable for that process.
That's interesting. Another question I have for you, right? Coming towards the end of the show, we talked about AI, but what excites you most about the future in private market / the alt investment space?
I think what is since the alt investment space, private market space is very document heavy. What I'm particularly excited about is a couple of innovations that are coming. MCP I mentioned, right, is hooking into enterprise data, but agentic AI. So there's a concept called agentic AI. I've talked before about RPA, robotics process automation. Agentic AI is essentially a marriage of automation workflow capabilities and generative AI. And that is rapidly gaining traction. And some of the leading RPA players in the space, like UiPath, Prism, and others, Microsoft certainly, they are starting to incorporate Gen AI LLMs into their technology. And what Gen AI does is that it can take autonomous action. So RPA and workflow automation, they basically take action, right? They take physical action as a user would. They can download a file from an email. They can drop it somewhere. They could reformat it. They could send it somewhere in a workflow, get a confirmation, approval, do something with it, file it away, whatever, right? They can log into a portal, sign in, download a report, extract the data, put it into a database, right? This is all kind of RPA. This has been around for a while. And I built teams around this stuff. It works pretty well. Now you have this overlay of Gen AI where it can take autonomous action. It can actually look for an email, get an email, could be an unexpected format. It could still try to extract it, and it could say, I think this is an invoice. This is going to go to accounts payable. It's going to summarize in the email, hey, here's how much, here's what's due, here's the attachment, here's I pulled your bank transactions that I could tell you the last 5 payments we made, and this one is a little bit higher, something to look into. Boom, it's sitting in the inbox the next morning. Just a super generic idea, but it's taking autonomous action using AI to make those decisions and do some research and look at enterprise data to inform itself and then do something with it. That's super exciting to me. And I think that in a document heavy industry, like the alt investment space, you're going to see that start to add tremendous value.
It's interesting you mentioned that. An old colleague of mine is leading a lot of efforts around the agentic AI space. So I agree with you. I mean, it's fascinating. It's literally the whole autonomous. It goes beyond just typing something in ChatGPT or doing something. It's now functioning on its own. It's making insight, saying, okay, you know what? I think we should do this, and actually based on
Totally. Yeah, I would equate that to like autonomous driving, right? Like a Tesla, for example. It's using AI now. They're really rapidly shifting toward being an AI and robotics company. It's using AI for your car to make decisions and then take physical action based on that. It's not pre-programmed. It doesn't know the road it's on and knows how to navigate around the cars, and they've been pre-programmed. It's literally watching everything that's happening, and it's using pre-trained models to make sense of the visuals around it, and it's say, oh, the car's slowing down here. I have it on fast mode. I'm going to go around this car and go to the left lane. Okay, I know that I shouldn't stay in the left lane too long. I'm going to go back in the right lane and stay within the speed limit. So it's taking action based on what it sees, and agentic AI is going to be the same thing, just in the digital world.
I think that's a brilliant way to conclude our episode, giving people something to research, and I'm happy that you're super excited about that. What we do for our guests at the end of our show is you're going to get the stage. I'm going to come off the stage, and you can tell people how to find you, more about CrestPoint, and you can do that right now.
Great, appreciate it. Well, thanks everybody for joining in. Like Nandi said in the intro, CrestPoint Strategic Advisors, we focus on digital transformation with a focus on AI, certainly, and roadmap, planning, digitization of the alt investment space. If you want to reach out and chat more, I'm very passionate about AI. I could talk about it all day. Gary at CrestPointAdvisors.com or www.CrestPointAdvisors.com. Thanks so much.
That's part of the show. You can always click on it, so it'll be there forever now. CrestPointAdvisors.com. Took myself off stage by mistake. So Gary, thank you very much. Before we leave, everyone, like I always say, whether you're watching this show today, live, tomorrow, next year, we really appreciate you for your viewership. We have a newsletter that goes out every week. If you have not subscribed to our newsletter, you are doing yourself a massive disservice. Not only is it free, it keeps you on the fingertips of what's going on in the fintech industry, and also it's giving a list of our upcoming guests and different topics we'll be discussing. So you definitely want to subscribe to the newsletter. You can do that at techbehindfintech.com/subscribe. On that note, thank you for watching the show. Thank you for your viewership. I really appreciate you. Gary from CrestPoint, friend, former colleague, always like having you on the show. Looking forward to future discussions with you. You have a great day, and thanks again.
Thanks a lot. Bye, guys.
Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.